Hi there, Kang here, and welcome to this week trade review video. So again, this is an initiative that started last month. So every week we'll conclude and share a view, some of the trades that I've personally taken, whether they are winning or losing, to pick a few to talk about it, so that the objective over here is to really share a view behind the scenes, the processes that I actually put in place in trading itself. Right, so very quickly, let me go through the framework that I use to approach my trades, and I call this the DSC framework. Again, some of you may have heard of this before in some of my sharings, so you may be familiar with it. But for the benefit of everyone, okay, maybe a first time here, I would just like to very quickly walk through the framework. Okay, the framework basically, DSC stands for Direction, Setup, and Context. What it basically means is that the first thing we always do when we look at a chart, when we look at an asset that we're interested to trade, is to first identify, do we have a clear directional bias that we can be focusing on, right? Do we have a pattern? Do we have any indicators to tell us whether to be focusing on a buy trade or a sell trade, right? Depending on the probability, which side has a higher chance. Okay, and once we establish our directional bias, which is the first step, then the second step is basically the setup phase, and that's where we look into opportunities to get involved in the trade, telling us which price, when to get in, which price to get out, when to get out as well, right? So that's the strategy component. Okay, and C stands for context, so I also look at other factors to add in the confluences, to look into the multi-time frame alignment, to actually ask the question, is this trade worth taking, right? So everything gels in together, right? So as I go through the trade review for this week itself, again, I want you to be able to see the application, right, of the DSC framework itself, okay? Direction, setup, and context. Now, very quickly, let me bring this up. So basically, this is the daily trading plan that I share with the members in the Trading Dose Pro. Okay, and you can see the recent close trades over here that we have for last week itself, this current week, depending on when you're watching this video, of course. We had 3 trades, right? So for me, one, I got stop out on the Aussie dollar. I'll talk a little bit about that. The Aussie yen, I got out at break even, but actually this trade eventually moved to hit our full target. Again, trade review, very important to talk about it and journal it down. And then the last trade here for the week, was also on the Aussie yen, but we managed to actually take full profit of this trade, right? So net for the week, it was a total net profit of 1.2 R. Okay, so over here, I do share also with the community, every week, the review itself, not so much on just the profit or losses, but I think what's more important is what are some of the mini lessons we can take away, right? So if you actually take a look at this here, I mentioned I took 3 trades, 1 win, 1 lose, 1 break even, net profit is 1.2 R. So basically the week started with the Aussie dollar, very aggressive buy trade. Again, when I'm taking this trade, I share with fellow traders, this is actually more aggressive setup. But again, if you're willing to take that risk, if you're able to control that downside, you're willing to accept the potential that, okay, this trade may end up losing, then that's perfectly fine, right? Because there's also the upside opportunity, right? The potential to make profits out of it. Okay, so over here I kind of like review a bit, and say that if we actually decide to be a bit more patient, wait for a more conservative setup, we would actually avoid this trade itself, right? So we would not have to lose it. The other one, the second trade, was actually Aussie yen. I got involved in it. The market basically hover around the entry point quite a bit, right? I think it's about almost 2 days, and I say, okay, decided that that's not the initial reaction that I want from the market. It's not ideal, not something that falls in line with my expectation of it, right? Because again, when I enter a trade, ideally we want price to move in our favor in the shortest time possible, right? ASAP. So Aussie yen did not, and therefore I decided to exit at break even. Okay, very quickly show you some of the chats over here as well, right? So you can see over here on the 6th of March, I put out to the community and say that I decided to exit the Aussie yen trade first and just wait for the better setup. Okay, this was actually, you can see, right, the timestamp was 8:47 p.m. And then at 11:30 p.m. the very same day, Aussie yen move, right? So again, it is what it is, right? And that's how the market is, right? Even for me as an experienced trader, sometimes that's how it is, right? We make a decision that, you know, sometimes may benefit us, sometimes may not. And in this case, your Aussie yen got out a break even, nothing to complain about. But obviously, if I held through a little bit, right, just for another maybe 3 hours, that trade would have actually hit our full take profit. Okay. So that was actually a break-even trade for me, and then the last trade was a sell trade on Aussie yen, which managed to hit our full target at 2.2 hour, right? So very quickly, let me bring you to the chart over here and kind of walk through the last trade, right? The full target trade, so they actually learn something out of this as well. Right, so this is actually the setup you can see over here. Very nice little trade to the downside, hit our targets. But let's go through why we took this trade, right? Why I actually take this trade. Okay, so DSC framework, right? So let me kind of go back a little bit. Okay, to share with you when we look at this. In fact, you know, let me also see if this is visible for all of you. Okay, so this is actually what I saw when we were looking at a trade, right? So let me bring this forward a little bit. Okay, yeah, it was something like that. Yeah, somewhere there. Okay, so the direction is very clear at this point in time, right? Why? Because what we have is an impulsive move and a three-wave correction that is completed with an initial rejection to the downside. So for me, one thing here that is very clear is the pattern, impulse correction. Right. The second thing that adds on, right, context, adds on to the confluences of this is this nice little reaction after a three-wave move. Okay, so two things starts to point to us that, all right, there's a high odds that the market will actually move lower, potentially towards this zone. Okay, and of course, in the context part, we're also looking at a three-wave structure, right? Because from this high here, the market came down once. This is potentially the second wave, and we're expecting a third move minimum, right? So we always expect the market to move in three, and that's the context element as well, right? So we can't add on layers to help us increase the odds that, right, the market has more downside potential, and we are basically bearish buys. Okay, and going back to this here, you can see the setup, you know, initially was like that, okay, on the H4 chart. So we're waiting for the pullback towards the supply zone. Basically, we're using the order flow setup on this trade, and we're looking to target at the downside, right? So again, if I kind of go back over here, right, this was how the trade looks like before we got involved in it. Okay, so why do we look up for a sell here, right? So very quickly, if I clean up a little bit, first thing first, we have a fair value gap over here created. Okay, so that's basically order flow setups, right? We want to look up for fair value gap. The candle above that is basically our order block, because we're interested in selling. The order block is essentially a supply zone, and basically what you can do is you can wait for market to kind of pull back into the fair value gap or even the supply zone to look for the sell. Okay, now over here, I also add in a little bit of Fibonacci's, right? Because edit wave uses a lot of it as well, and then in terms of order flow, can add that in as well. So the Fibonacci retracement is 71 area kind of confluence, quite nice with fair value gap as well as the supply zone. Okay, and oftentimes you find that confluence, right? So for me, very simple, you know, put in a pending sell limit, stop loss just above that high. Okay, and of course the target here is the swing low. I targeted this swing low, but of course if you put it all the way back at this swing low, basically price hit that too. Okay, so if you can't target all the way, it's a 2.6, but for me it's basically here, so it's a 2.2 R, right? And that's all, right? And we basically just wait for the market to develop, and as this continued to develop, we kind of got hit. Our trade was triggered. It did not immediately go in our favor, right? But it kind of had a little bit of drawdown. You can see over here, and then it starts to move. Okay, and of course, if you're aware, last Friday we do have the NFP as well as the Canadian labor market data. But since we're trading on Aussie yen, you know, I'm not too overly concerned because it's not kind of directly related. There might be some impact, right, from the dollar and the Canadian side of things. But again, it's not a direct relationship, right? So I'm not too overly concerned on that, and basically the market just roll over and then close as it is like this. All right, so very straightforward. simple processes as well, because we have that framework to guide us: direction, setup, and context. Okay, so I hope this short video here give you a glimpse into what real life trading is about, right? It's not always about wins. There are losings, trades, there are break-even trades. Sometimes we struggle with the psychological aspect of trading as well. But I think more importantly is how we manage it, right? And I just want to show you, it's not just about the win rate, right? Because if you kind of look at last week, I have 3 trades: 1 win, 1 break even, 1 loss. Okay, and basically if you put it out, the win rate is about 50-50. But because of other factors of trading like risk to reward ratio, we're able to come out of the week profitable. Okay, and my first trade of the week on Monday, Tuesday was a losing one, right? And then I got a break-even one. And again, the aspect of trading discipline comes in as well, right? You do not want to revenge trade. You need to control your emotions, okay? And obviously, look for the next best trade and have the confidence to still pull the trigger, in this case on Aussie yen, okay? To end off the week at least profitable, right? So that's all for me for this video. I hope you gained some insights out of it, okay? And if you're ready to join us in the Trading Dose Pro member, click on the link. You can find this below. If you're watching this on YouTube, it'll be in the description. If you're watching it on Facebook, my Facebook page, there will be a link included in this post. If you're watching on Instagram, then just click on the link found on my bio. Okay, that's all for me. All the best for the new week, and I'll see you guys in the next trade review video.